President Donald Trump recently signed the Genius Act into law, vowing to make the U.S. the crypto capital of the world. And joining us now to share more about exactly what cryptocurrency is, we of course have all heard of Bitcoin and maybe Ethereum, and also how the new legislation could impact the crypto market, is Brent Wilsey. He is the president of Wilsey Asset Management. Hi, Brent. Good to see you, buddy.
Good to be here. Thank you.
Let's go over just the kind of Bitcoin 101, Ethereum. There's so many kinds of cryptocurrencies, but what are they? How are they used? Why do people buy them and sell them?
Well, actually, there are about 17,000 cryptocurrencies, which include the new thing, these stable coins, which is what this act was on. And cryptocurrencies are just digital currencies. The opposite is a fiat currency, which is backed by a government. Like if I give you a $100 bill, you know it's worth a $100 bill. But if I give you a Bitcoin, it's not worth $100. It's worth on what the trading amount is. So there's no true value to it. And it's only based on supply and demand. The more the demand is, the more price will go up. If demand goes down, the price will decline.
I know, for example, Bitcoin is trading at about $117,000 right now. I think it got up to 120. But you could buy, say, $100 worth of Bitcoin, and then maybe you could use it to trade the $100 worth of Bitcoin for something that the person thought was $100, and then it's almost up to them whether they want to cash it in fast, right? Maybe pay a fee or hold on to it. Maybe it goes up, maybe it goes down. And so it's this kind of currency. What happens with this Genius Act? What is this going to do, this new law that the president signed?
Well, this is supposed to give people some sense of security if you're buying stable coins. The stable coins try to reduce the volatility. They'll take your cryptocurrency, attach it to a stable coin, so you have some feeling of comfort. Well, what President Trump did, he signed the Genius Act, which stands for Guiding and Establishing National Innovation for U.S. Stable Coins, to try to give you some comfort here. I think it falls way short. What they're trying to do is have licensing and oversight on stable coins. And the licensing, you have to go through a bank charter, the OCC. If it's a state, you have to go through the state monetary board. You have to go through them. So try to get them licensing so not anybody can have a stable coin. Also, too, what it does, it tries to provide consumer protection. This falls really short. If you put money in your bank, you know you're backed by the FDIC, the government insurance, and so forth. And by the way, the banks put money in that to support that. With stable coins, what they said, like, okay, so if you buy a stable coin, if that stable coin issuer went bankrupt, then you have the right to get paid back first on the stable coin. Well, if the company is way over leveraged and broke, there's no money there. So it's kind of a false sense of security they've come up with, which is not going to do anything. And if there's a run on the stable coins, the price of crypto is going to drop dramatically. And all it takes is that concern for consumers, like, I'm going to lose my money. I better be the first to pull out.
Is a stable coin different from like Bitcoin and Ethereum and those cryptocurrencies? Are there kind of two?
Yes. A stable coin is something that tries to back up and give you value. And and stable coin, the way they do it by collateral. So if you buy a stable coin, it's supposed to be backed by a currency, maybe the dollar. So if it were to drop, okay, well, it's all backed by dollars. That's called collateralization. They have algorithms which failed in 2022. I think it was called Teradata or something, was with Teradata. And that failed because the algorithms, what happens with that is that it gets very complex, but if the price of, if the price drops, what they'll do, they'll issue more. So they're manipulating the price of the currency. And that's why it failed in 2022. So the best one is to have the collateralization, but then you don't know the custodians that are doing it. Who knows for sure if they're really having it backed up? Boy. It is so high risk, and it's very disheartening to see how many people are getting into this.
And complicated.
Yeah, very
Brent Wilsey.
Yeah, I'm trying to make it as easy as I can.
I know, it's not your fault. Thank you for shedding some light on the difference between stablecoin and Bitcoin and Ethereum and cryptocurrency. It gets people thinking about, oh, what is all this stuff? And, you know, it kind of gets you going.
I would say if you want to gamble, gamble on it, but
there you go.
Not put your safe money to it. I'm very upset too because they're talking about allowing it into 401ks and retirement plans. It's not good.
All right, Brent, good to see you, buddy. Thank you.